All right, let's jump right into it. A massive structural shift is unfolding in the global commodities market right now. We're talking about a severe supply shock in one of the absolute most critical metals on the planet, tungsten. In this explainer, we're breaking down the geopolitics driving this bottleneck, the West's desperate scramble to secure supply, and exactly how Almonty Industries has managed to ride this chaotic wave to a huge NASDAQ breakout.
Okay, let's dive into this. 900%. I know it sounds like a typo, right? But no, that is the actual staggering price surge we've seen for APT, which is the key refined intermediate for tungsten. We've watched spot prices absolutely explode, shooting up over 500%, from roughly $300 a unit, screaming past $3,000. This isn't just some standard market fluctuation, it's a profound, systemic dislocation. Section 1. The Global Tungsten Choke Point. China's dominance and the West's vulnerability.
When you break down the numbers, the vulnerability is just crystal clear. China essentially has an 85% stranglehold on global tungsten production. The entire rest of the world combined, they're scraping together a mere 15%. I mean, it literally gives a single nation near total, unprecedented leverage over a resource that the global economy desperately needs.
And you might be wondering, why is everyone panicking so much? Because tungsten isn't just another industrial metal. It's an absolutely critical strategic asset. It boasts the highest melting point of any pure metal on the periodic table. We're talking an astonishing 3,422 degrees Celsius, paired with extreme density. Those properties make it utterly irreplaceable for high-stress defense tech and aerospace. Without it, the advanced tech and defense sectors quite literally grind to a halt.
Section 2. China's export control shock, tightening the grip on critical metals.
Let's move to and see how this builds, because this supply panic definitely wasn't an accident. Back in February 2025, China rolled out aggressive rare metal export controls. By December, they hit the market with a highly restrictive exporter whitelist, and then followed that up with a strict dual-use framework in early 2026. Beijing systematically and very intentionally tightened its grip, essentially decoupling its domestic market from the rest of the globe.
And here is where the bottleneck gets incredibly narrow. Exactly 15. That is the total number of Chinese companies actually permitted to export tungsten under this new whitelist. By restricting the global trade pathways to just this chosen 15, the state effectively shut out independent traders and foreign intermediaries. They made sure every ounce of exported tungsten flows through a tightly managed, state-backed system.
But here's the thing. It's not just policy pulling the strings here, it's geology. Behind these export controls is a severe, worsening internal supply crunch within China. Over the last 20 years, the average grade of Chinese raw tungsten ore has plummeted from 0.42% down to a meager 0.28%. It now takes 300 to 400 tons of raw ore just to yield a single ton of usable concentrate. This incredibly energy-intensive reality has pushed the absolute production cost floor way above 100,000 RMB per ton. The era of cheap tungsten? Yeah, that is officially over.
Section 3. The 2027 Defense Deadline. The U.S. Race Against the Clock.
Now, what's really interesting about this is the stark reality of the U.S. position. The United States literally has zero commercial domestic mining of tungsten. Nothing. The last mine closed its doors back in 2015. So as global demand absolutely explodes, the U.S. is sitting there completely empty-handed.
And that demand, it's rigid. On the defense side, the Pentagon urgently needs it for armor-piercing projectiles, kinetic energy weapons, and rocket nozzles. Meanwhile, on the tech side, Silicon Valley is desperate for highly purified WF6 gas, which you have to have for depositing interconnects inside modern semiconductors, like DRAM and leading-edge logic chips. So you have massive tech conglomerates and defense contractors fighting tooth and nail over the exact same limited resource.
Which brings us to a huge looming roadblock. January 1st, 2027. That is the hard federal deadline banning U.S. defense contractors from sourcing critical metals from rival nations. It's exactly why we are seeing aggressive, almost frantic new initiatives like Project Vault stockpiling. With zero domestic mining and a hard cutoff date rushing towards us, the West urgently needs a massive, reliable, non-Chinese source.
Section 4. Reopening the Sangdong mine. South Korea's historic giant awakens. So, what is the micro-solution to this macro nightmare? Enter Almonty Industries. After sitting completely dormant for 32 years, they have officially reawakened the Sangdong mine.
They just wrapped up Phase 1 commissioning, which is designed to process 640,000 tons of ore into roughly 2,300 tons of concentrate every year. And they're not stopping there. Phase 2, slated for 2027, aims to rapidly double that processing capacity to 1.2 million tons of ore, pushing output to a massive 4,600 tons annually.
The structural setup here is, frankly, incredible. We're talking about a projected mine life of over 45 years with an average ore grade of 0.51%. To put that into perspective, that's roughly 3 times the current global average. It's located right in South Korea, a strategic, rock-solid U.S. ally, and it's backed by over $100 million in redevelopment investment. This isn't just a mining project, it's a massive geopolitical countermove.
And this brilliantly illustrates the math behind the strategy. Once fully operational at capacity, this single mine has the potential to satisfy up to 40% of the Western world's non-China tungsten demand. It is the precise, scalable supply-side answer the West has been desperately searching for ahead of that 2027 defense deadline.
Section 5. Analyzing Almonty stock. Market performance and financial catalysts.
Obviously, Wall Street is paying close attention. With Almonty stock hovering right around $16, the consensus target on the street sits at $27. That implies a roughly 63% upside, driven almost entirely by the fact that Almonty is successfully bringing high-grade supply online right in the middle of a historic global price squeeze.
The bullish catalysts are really stacking up right now. They recently reported a solid $43 million in Q2 2026 revenue, which was driven straight by those global price surges we talked about. They also just locked in a 6-year extension to their offtake agreement with Global Tungsten and Powders, boosting the volume by 40% and bumping prices up 6.3%. Add in their recent inclusion to the prestigious Russell 1000 and 3000 indexes, and the financial foundation is looking extremely solid. But honestly, perhaps the loudest signal of confidence is coming from inside the house. Almonty's board just greenlit a massive new share repurchase program of up to $300 million over a 36-month period. Management is publicly stating their belief that the current market pricing simply doesn't reflect the immense underlying value of their strategic assets in this geopolitical environment.
Section 6. Weighing the investment risks. The bear case for ALM.
So the crucial point is we have to look at this objectively and weigh the realities. The bull case? It's undeniably strong. A surging market, guaranteed buyers, and stable production coming online. But the bear case is very real. Operating a mine is brutally complex. Almonty faces high execution hurdles at these newly commissioned plants, and let's face it, extreme price volatility could seriously test their operational costs if the winds change. You absolutely have to keep an eye on the capital structure too. Investors are eyeing this massive $800 million overhang in convertible notes, creating a very real threat of future share dilution if capital needs to be raised. Plus, in a market driven entirely by geopolitics, sudden shifts in international trade policy or unpredictable tariffs are a constant, ever-present vulnerability.
Which brings us to a final, pretty provocative thought. The story of Almonty Industries isn't just about one mine in South Korea. It's a micro-reflection of a massive, high-stakes macro struggle. As that January 2027 defense deadline bears down on us, the race is officially on. Will Western allies successfully secure their supply chains through projects like Sangdong? Or will this dangerous chokehold on critical metals remain unbroken? That is the multi-billion-dollar question shaping our technological and geopolitical future. Thank you for joining me for this explainer. Keep your eyes on the supply chain, and as always, keep learning.